I would say on the global market, particularly in the United States, what we're seeing is a very strong move on logistics real estate. Because of the post-pandemic, the demand necessary to satisfy all e-commerce and onshoring that we're seeing in the States is requiring about a 15%, 20% increase in the amount of real estate that the companies need to satisfy that demand. So we're seeing extremely strong demand, and of course rental rates are following on that trend. As well, we're also seeing the continued demand and increase in the use of technology. And there are technology real estate companies, particularly in data centers and cell phone or mobile towers, where the demand for that real estate continues to increase based on increased use of data and mobile uses that we're seeing around the world. The CAGR increase that we've seen over the last 20, 25 years is about a 30% increase per annum in the amount of data that flows through people's usage. And now, with the onset of 5G in the United States and coming here in a couple of years, plus 4G in places like India and Latin America, which didn't have that, we're seeing an exponential increase in the amount of demand for product that goes through cell phones and, of course, e-commerce platforms. So the demand is going to be accelerating over the next decade. Our global real estate platform doesn't really invest in any India proper companies, Indian REITs. We don't invest in those right now. However, one of our largest holdings is the largest global provider of either data centers and cell towers in the world, and they both have a small percentage of their business in India, which is a big growing market. So we see exponential growth in India because you think about the billions of people, and there's no landlines, so they're just getting into the beginning of exponential growth of data usage on their phones. That's a really interesting question. You know, we try to parse it down and kind of peel back the onion. There's a lot of sectors that have relative growth. Obviously, we talked about those like multifamily and industrial and data. And in the office sector, right, the office sector is one that's very controversial right now with the work from home and the question about where people will be working over time. So we tend to look at office in a few different ways. It's more like a commodity office building or a specialty office type building. So we tend to like office buildings that are involved in medical office and life science and defense spending. These are areas that you have to show up every day to go to work. You don't have the availability to work from home, and the demand from the users of that space is quite robust and will continue to grow. During COVID, there was this idea of COVID darlings, right? Stocks and businesses and industries that have done extremely well off COVID because of a shift in consumer behavior, right? So that's the background. Two companies in the tech world fit that. One is Zoom and the other is Peloton, right? Both went extremely up and then have since gone extremely down, right? Because now we're post-COVID and we don't know if we're going to use Zoom as much, which we probably will, and certainly people may or may not be using Peloton as much. But nonetheless, the stocks have fallen dramatically. So the stat I like to use, and we have this on our presentation booklet, is that since the peak in October of 2020 to now, those stocks have fallen, so the relative return of those stocks against the three sectors of REITs that have benefited from COVID, logistics, multifamily, and technology, right? There's a 90% positive delta in the real estate stocks against those from the peak in 2020.